Hey everyone, welcome to the Real Estate Investing War Room Live. I'm Ryan Tennell with Top Producer Investment Capital. And in here, we go over all the different things that I think are interesting about real estate investing. And this is a live format. So if you're looking on Facebook, LinkedIn, Twitter, you can comment your questions and anything else that's going on here to interact with this and voice your opinion or, just kind of let me know what you're thinking. So today I want to go over, I wrote an article this morning about what I think is going on with a lot of the competition in real estate investing, specifically multifamily investing. I mean, we've all seen what's been going on with the news headlines recently about interest rates being high, um, property values, especially in Texas, going down, and how that's affecting a lot of the investing. I think overall people are still moving to Texas. So long term, I am still bullish that Texas is a good market to be in. But this is a difficult time to invest. I know personally, as I look out at the real estate investing market, we only bought one deal this year, and we only bought it because there were seller financing terms on the deal. Everything else we have, I probably underwrite 3 or 4 deals a week. Of those, a few of them I go tour, but most of the time, for these multifamily apartment complexes, we'll have a broker say that the price is, 3 or 4 million that the seller wants. And for example, let's say they say it's worth 4 million. Even if it's a deal that, we can go in there and fix a couple of problems, raise the rent, and still some better management, what have you, to increase the value of the property, we think it only makes sense to buy it, maybe at a $2.8 million price instead of 4 million. And I can't blame the sellers for wanting to keep their sale price at 4 million because maybe they have a interest rate locked in, or maybe because, they're not as pressured to sell. But I think as balloon payments come up, more people are going to sell over time. But what's interesting, I see that even if someone is distressed, does need to sell because they have a looming balloon payment, or they're losing money on a deal, or it needs repairs, if they bring it to market. There was a Old Capital conference where they recently brought a deal up in, East Dallas to market, at a, $7 million price point. And they had, I want to say, like 70 offers on it. And I know a lot of people aren't buying houses right now because the interest rates are low, but $7 million apartment complex getting, 70 something offers on it is quite a lot. And I think it's because a lot of these people who were, buying, 10, 20, $30 million apartments are having trouble buying that big a price anymore. So it's more comfortable come down to the, $10 million and less price range to buy some of these. So the competition's getting really stuck in there. I'm also seeing what the article I wrote this morning was the competition's getting fierce, partly because of that compression from the bigger institutional guys coming down, but partly because real estate's just been really popular. Sites like Bigger Pockets have broadcast a lot of the benefits of real estate, and they've spread a lot of the knowledge out there about what is possible when you invest in real estate. Obviously, I've been a fan of them and a lot of the other people that are teaching real estate, and I've learned quite a bit, and I like to spread the knowledge as well. But the more people that know about real estate, the less it becomes a secret. So I wanted to share with you guys what I'm seeing as far as like news articles, educators, gurus that are out there in the space, some of my thoughts on them and some of my broader thoughts about how the competition, especially in the multifamily sector, is playing out today. So I'm just going to go ahead and share my screen. As always, if you guys want to comment your questions or what's going on, feel free to do that in the chat. First of all, a little shout out. I was recently on the Best Ever Real Estate Investing podcast with Joe Fearless. I was interviewed by Slocum Reed. He was great. It's a wonderful podcast. If you haven't listened to it yet, take a look at this. You can go to their website, bestevercrepodcast.com, or find it on iTunes, Spotify, wherever you do that. Also, in other news, I just recently learned yesterday, Charlie Munger passed away at 99. Very sad day. He was a good idol, Warren Buffett's right-hand man and partner, and so much more. So definitely prayers up for him. Sad day for all investors as that's happened. So let's kind of talk about, I've got a few articles that I wanted to pull up, and a lot of these are just going to be who the multifamily syndication educators and gurus are. These are just the ones that I know about. And I'm sure there are many more that are out there, and part of the rise of all of this is because, if you've been in real estate for a long time and you flipped a lot of buildings, it's a lot of work to go out there and find the deals and operate them and raise the capital and do the construction capex and manage the residents and file evictions and report to investors, it can be very profitable, but it's a lot of work to go in there and do all of that. So it's a lot easier if you've done it for a while to just become a coach and to teach other people how to do it and to charge, $5,000, $10,000, $20,000 to create a following and sell education courses and teach what you've done with very little risk. And it's very scalable. You can sell courses all over the US and you can go on speaking engagements. So it's a very profitable business to be in the coaching business, much less so and with much less risk than it is to buy and operate apartment complexes. So I see why there is an excitement to get into the coaching game because it's a lot easier. But here's a couple of them. Joe Fairless. This was actually the guy that was on his podcast. I think he's great. I think all of the guys that are up here are actually great educators, but I'll just show you how many there are that I even know about. And then, how many more there probably are out there that I don't even know about. So there's Joe Fairless. We've got, what was this guy? Moshet Syndication Group. They teach how real estate syndications are created and put together. All the terms. They sell their coaching program here. Brad Sumrock is based out of Dallas. He's probably one of the bigger educators or the bigger well-known ones. And yeah, he'll teach everyone how to, invest in real estate. He's got a course that he sells and he does conferences, all across America, but specifically he's founded in Dallas. So a lot of Texas based. If you haven't heard of Grant Cardone, he's got his Cardone Capital and he has his YouTube channel where he teaches about basic real estate investing for rental properties, but he's done a lot of multifamily investing in his fund and also just teaching people about why multifamily investing is good in general. We've got Rod Khalif. He was actually one of the first educators I ever met in person. He has a big following. A lot of people learn how to do multifamily syndications through him. He has a good master class. We've got Michael Blanc, one of the first guys that I ever found on YouTube, hosts a conference, hosts a lot to teach Wheelbarrow Profits. I actually went to their education class and I learned a lot about how to do syndications from their education platform here. Gene Towbridge, and so there's just many educators out there in the space, teaching, which is good because you can have your variety of how you want to learn, and they all offer different styles. I found the one that was right for me. I do want to go and say, okay, well, what has happened now that everybody's been getting in? They're teaching how to do real estate syndications basically to anybody that wants to learn. So there's some articles, this one, there's a lot of foreclosures in Texas multifamily Class C, which is basically, built between 1970 and 1990 apartment complexes, which is the type that we buy that, you go in and you spend some capital expenditure money to raise the value of the apartment complex and you improve it. And then you raise the value of the property and raise the rents and everything along the way. We've seen a lot of foreclosure. Well, not a lot, but they're starting to come. Arbor Trust recently foreclosed on Houston, 3,200 unit. I mean, this wasn't small, right? $230 million foreclosure. And this was published in April. So they had done that in March. There are more that are coming. We just haven't seen them yet. And a lot of this is because of the rise of the interest rates. And a lot of people got into bridge debt financing a year or two ago. And it's not necessarily that these people, certainly at this scale, this is a big amount of money. These people were not brand new in the business, but I do see a lot of people that are brand new in the business getting into deals that they're really excited to get into deals. They underwrite, but when you're doing a lot of this underwriting, there's a lot of levers that you can push and pull to make a deal make sense on a spreadsheet, especially when you forecast 5 years into the future. And I know a lot of times in Texas, I was having a conversation with an investor recently about, how is it that deals make sense in, smaller markets more so than they do in Austin? And it just depends on how you value properties. Austin is very much an appreciation market, or it was. It's depreciation market in the last few months. But over time, it will, tend to go back up just based on how many people are moving to the, Texas area and, Austin and surrounding area specifically. But, it's hard to make any deal in Austin cash flow right now. If you were to, have an apartment, let's say it's a 2-bedroom apartment, and you want to get $1,000 for rent. Well, if you go out to, small towns, that might cost $50,000 to $80,000 per apartment to get $1,000 a month in cash flow. Where if you go to like a San Antonio, you might have to pay, $90 to $110,000 a unit. If you go to Dallas, you're looking at $110 to $150,000 a unit to get that $1,000 cash flow. And then in Austin, you're probably paying, I'd say 130, maybe up to $160,000 a unit to get that same $1,000 of cash flow. So it's just harder to make deals work when you're paying higher prices, and then they don't cash flow, and you're basically betting that over the long term Austin is going to appreciate. And when you do that and Austin doesn't appreciate and rents don't appreciate, this is what happens. So here's another news article I'm seeing: increase in multifamily apartment complex getting foreclosed across Texas. The 3,200 that they mentioned with Arbor. They're talking about, more about just what they're seeing, and then here's a profile that I recently came across. This was done in the beginning of October. And this is basically saying, Brad Sumrock, one of the, gurus that we had mentioned earlier, and he had built this empire. And now the cracks are showing basically that a lot of the students that he has coached are having financial difficulties. And even though he is a coach, he guides them and he helps them go through underwriting. But, when push comes to shoves, the students are the ones at the end of the days that have to operate these properties. And if they don't have experience, or even if they do have experience, but they've just overpaid for the property to begin with, or they got into adjustable rate debt that has gone up quite a bit and the property can't sustain that for a long time, they just kind of took on a little bit more risk than they, had the chops for, or they really shouldn't have, or really too much risk than the market supported. This is kind of what happens. And so this is what, this article goes in to say basically that, a lot of his, he says he's never lost any money, but a lot of his students now are losing money or getting into deals, having overpaid, and basically being forced with the decision of, do I, kind of cut my losses and sell for a little bit of a loss now, or do we try to, work hard and turn this around and potentially face a bigger loss later if we can't turn this around and we just hold this for more months? And, what if the economy gets worse over the next while? Same with another Grant Cardone, is basically saying, hey, he's built his empire based on a lot of people coming in, but even Grant Cardone is having struggles with the current market because his philosophy is, go in and buy basically everything that you can. Real estate's great. It's going up over time, multifamily cash flows. And I think he's got some good investing principles, but I think he's been buying a lot of very expensive real estate that's having difficulty right now because he's been just buying, everything in sight. So these are just a lot of, what I'm seeing out there in the market. Obviously I do multifamily syndications as well. And I put a big emphasis on, underwriting to say that, what's obviously we want to make money. What's the best case scenario? But at the end of the day, what's the difficulty that's going to come up? Where are some of the potential cracks? Where are the hurdles? What's going to happen if, we find out we're not hitting market rents? How much vacancy can we have until we're breaking even? How long can we have until we're losing all of this? So we never want to get to that point. And luckily all of our deals are, doing well at this point in the cycle. And they're all at a point where we're going to continue to, make them more and more profitable as we have longer times in the market. But I am just really cautious with multifamily in general. So that was what my article was on this morning. We've got, some comments coming in. Appreciate it, Ilya, with what we're seeing out there. So my thought is, I think multifamily is going to be good, and I do see there's going to be distress, but I think there's going to be just as much competition because we've got a lot of new people in the market, and we've got a lot of people that haven't had a deal, haven't been able to do a good deal in a while. So as some of these distressed sellers bring their properties to market, I still think they're going to get a lot of offers. I think there's a lot of institutional capital sitting on the sidelines that, when the economy shows signs of cracking and interest rates drop down to 6% or 5% in the next 1 to 2 years, that money is going to come back into the market. I think that'll potentially push values up a little bit, but it's just hard to speculate. And when they do push values up a little bit, it's going to be just equally as hard to cash flow. And right now we're competing with a lot of institutional money that's out there. So the multifamily space, to kind of sum it all up, is very crowded at the moment. I think there are a lot of good investments. I think multifamily can be a very good one, but I think at the end of the day, it's going to come down to, having good partnerships, good operators, and being able to work with People that are really good deal finders, have strong relationships with brokers that can bring those deals in and then operate them really well, and then trust in who your sponsor is. There's a lot of other real estate classes out there. I know there's, office is also having a really difficult time. I wouldn't go into office myself, although if you know office very well, and you probably can find some really good deals if you know how to operate it and really turn it around, or maybe convert it to some other type of class of asset. Mixed use, I would be a fan of, as you're combining a little bit of retail and multifamily, and you can almost build the community around you. But there are plenty of other options. I've seen data centers come up. I've seen, what is it? Senior living facilities go up. As the elderly population continues to age, there's less kids getting born. I could see a bigger need for elderly centers as demand goes on. Industrial flex space warehouses, I think, is great because there's very little maintenance in those spaces. But there's also a lot of potential to have them rent out as the Amazons and the other small businesses grow. With COVID going on, I think a lot of people have started their own new business, and a lot of those new businesses need a place to store their tools or set up shop. And so I think a lot of people are, I think there's going to be a need for industrial warehouse space over time to support those new businesses that are coming online. So, and then the other thing I thought that was interesting was cremation ceremonies with end of life. There was an article that came out that said about in 2007, about 30% of the population did cremations, and last year there was 59% of the population that elected for cremation ceremonies. So I'm sure there's some other ancillary businesses that can go along with those services, but with that sharp of a rise and likely a trend in that rise over time, building some kind of real estate around end of life with this type of what am I trying to say? I think there's just opportunity out there as you look at the elderly population. So real estate is still a good investment. You got to know where to look. You got to trust your sponsor. But just kind of look at the data, and if something's getting too competitive and too hot, and there's kind of too much supply of buyers coming into the market, let's see where there's not enough supply of buyers. Where's there's opportunity? Where can we create value? Maybe if that's somewhere else, but it has to be risk adjusted. Don't get into something that's very trendy and flashy and it's going to be here for a short period of time and then gone. And not getting into something that you don't really understand, where it looks like a good deal on the surface, but if you've never done it before, there's a lot of surprises that come around. So anyways, I've got a little bit of a head cold today, so this one might be a little bit shorter. But this is Real Estate War Room Live. We do these pretty much every Wednesday, starting at 6 p.m. I will have more interviews over time. Right now it's just a lot of me speaking because I see a lot of interesting articles going on. And, so I typically will post Wednesday mornings, my thoughts on the real estate market in general on my Facebook, LinkedIn, and Twitters. And then, we can discuss them live here in the evening. So if you guys have other things that we want to talk about in the future, please feel free to, get on here and feel free to be a guest or comment what you guys think we should have our next discussion and articles on. And then, as we get new partnerships coming and we have new guests that come on, I will have interviews with more and more people. We actually do have a new hire coming to join the team at the end of the week here. I'm very excited about that and can't wait to share that with you. So Matt has a good comment here. Appreciate you taking the time to tune in, and absolutely would love to do a deal. Matt is a boss doing real estate here in Texas as well. So all right, thank you guys, and we'll talk to you again next week.